What's going on, everybody? It's your boy C-Zar, and we are talking about XLM today. Hit that like button, subscribe if you want to see more content like this, and let's get into it. Okay, let's talk about the price. Here we are at about 30 cents right now on not a 1 hour basis, I'm sorry, on a daily basis. We're up about 1% today, but yesterday we dropped about 10.59%. That's a pretty average drop for the rest of the market, right? That's basically what we saw across the board. So makes sense. I do think you have a little bit lower to go, but I don't believe that you're going to go below this low here. You might, however, interact with it one last time. You could even, I say you won't go below there, but maybe you go just barely below there, but if you do, it's going to be very short-lived, and like this one, it's going to be a very large wick, right? Something like this. I kind of anticipate something like this to happen. Right, we had a very big wick here, and then you got close to it. It was a double bottom, but that double low, that second low came in just above that high. That's kind of exactly what I'm expecting to happen here, actually. From a low here to a high, what did that do? That went all the way down to your 886 retracement. From a low here to a high, 886 would be right at 27.2 cents. What if that's where you go? It's very, very common whenever you break through the golden ratio like you did here, unless you close today above the golden ratio. If you do close above 30 cents, well, then maybe that was the low. Maybe you start recovering. I wouldn't say it's that simple necessarily, but it could be rather suggestive of a reversal here. Closing below the golden ratio one day and then closing above it the next day tends to be a rather good reversal signal. But not always, right? All I'm trying to say, though, is generally when you do close below the golden ratio, what you look to find support at is the 786, 886 zone. That's the next zone, right? So being that you've done this kind of similar, and I wouldn't even say similar yet necessarily, but this idea is going to, it's the idea that I'm going with here. So by a similar kind of connotation to that, a similar expectation would be anything from 28 cents to 27.2 cents. And I really do like the 886 area specifically. That's where I think we're going to go. If we can look at this on a different metric too, from a high to a low here, you're 886 again at 27.23 cents. If we take the low to the high here on this fib and we get our extensions, right? I'll delete this real quick so you can see what I'm looking at, right? I'm measuring from, come on man, from this low here to this high. It's like the last pivot that we had before going down here. You're left with these extended areas. If we bring back the fibs here, you notice that the 886 is just above the golden ratio here. So perhaps we do go just below the 886, but right in that area, man, right around 27 cents, 27.2 cents, tomato, whatever. It's going to bounce, I would think, somewhere around there. If not here, again, closing today green, specifically above 30 cents, could be rather encouraging. I think the most encouraging thing would be to get above about 34.5 cents. You get above 34.5 cents on a daily closing basis, wherever your low is, whether it's here, it's down there, wherever it is, that would likely solidify that, and you would be moving to the upside. But it certainly would be exciting, I think, to see at least today close above 30 cents. I don't think it will. I think you go lower. Let's talk about why I think you're going to go lower. Well, I mean, first and foremost, Bitcoin looks like it wants to move lower. The others chart, the altcoin market cap chart, looks like it wants to move lower. You did just break out of this consolidation phase. That's a breakout candle right there. The fact that you just did that yesterday tells me it's probably not over yet, right? It's the same kind of concept here when you're in this consolidation phase, okay? Whenever you broke out of it on this day, or maybe it was this day, was it over? No. The very next day you continued to drop, and even then still you bled out over the days to come. So no, generally breaking out of a consolidation phase does not end after the first day. Sometimes it does. Those are called fake outs, and you never know. And that's why I think closing above 30 cents could be rather indicative that maybe this is a fake out, but not entirely. Okay, looking at the 4-hour time frame, the RSI here, you do have a lower low in the RSI, lower highs and everything. It looks like you might find support here momentarily, but I'm not convinced that this is your low just yet, right? You could from here pull all the way up to about 32 cents, maybe just above that, maybe just below that, but I would think you find resistance somewhere in this zone. Prior areas of support, once you break out, they tend to become current areas of resistance. So breaking out, back testing immediately, and then going lower, that's a very common thing to do, so I anticipate you do that. From a relative high to the relative low, that's your 382. Oftentimes with your 382, especially if you're going lower, you look to find resistance right at your 382, and oftentimes with the 382 on your first pass, that was not what I meant to grab. I wanted to grab this white line here. right? Why won't it let me grab the white? Okay, there we go. Oftentimes you do go just above the 382, and that's where this 32-cent area is. That's where your prior areas of support are, where you could find resistance. So it would make sense, I think, from here at 30 cents to go to 32 cents. I think that you're going to do that probably between now and the next like 8 hours or so, the first half of the day. And then the second half of the day, you'll come back down. You'll close the day red, and you might even close lower. I am anticipating that between now, the 25th of February, and the next 3 days, between now and the end of the month, we will find our lows. Okay, the end of month pump. I hope it's clear. I hope I don't have to say it, but being that it's the 25th, I hope everybody's aware that the end of month pump is not on the table anymore. I hope my crypto crash Bitcoin red alert video earlier was enough to at least signal that I'm not anticipating that anymore. But essentially, again, between now and the end of the month, over the next 3 days, I am expecting we find our low, and then going into March, we'll probably meander a little bit in maybe like the first day or two of March and start to grow from there. I think that the end of March will be everything that we've been expecting it to be and more. I really do think that April or that this move up could continue through March and go into April is what I was going to say. 30 cents, 30.2 cents now. Fresh breakout on a daily aspect, looking like you want to get oversold, but you're just not quite there yet. But I think you will be soon enough. Once we get to those prices around, I think 26, what was it? It was like 27 cents to 27.2 cents. That's when we can start talking about moving up higher again. And of course, there's always the possibility that you could move lower than this, but I don't necessarily believe that you will. I think that's your low. I don't think that you go lower than that. If you do, maybe you pull back to 22 cents, maybe you pull back to 20 cents even. You could go to 20 cents, I suppose, but I wouldn't expect that personally. I don't think that you go down there. Let's just see real quick too. Low to high here. I mean, your 1272 is right there. Right there. Perfect, man. Double bottom off the 1272. I'd love to see it. Right? And then from this metric, getting above the golden ratio. I think a really good price to get excited for. I know we've talked about a few, but the one that would have me the most excited that you're not just at a low point, but you're ready to rip and break out and see new all-time highs would be 37.8 cents, 37.7 cents. That golden ratio there. Because whenever you are going from a low to a high and you're hitting your extended zones, right? Whenever you invalidate going lower, it's whenever you come back up and you close above the golden ratio. Not always, but generally speaking, that's a good thing to do. So, because oftentimes it's breaking through the golden ratio that suggests access to the extensions in the first place. You break back above it, that takes away that access and then promotes access to higher prices instead of lower prices. So, getting above again, basically, let's just call it 38 cents so it's easy to remember. 37.8 cents if that's easier or whatever. Inevitably, when you do move higher, I suspect you will see targets above $2. Okay, if we take this high here to a low, your extended zones here, your golden ratio is at $1.10. Your 1886 is at $1.44, and your 2272 here is at about $2 itself. It's very common with the 2272 to go just above it. The reason why I'm not giving any notion at all to the 1618 to the 1272 is because I don't think that after a move like this, with this kind of very nice and tight methodical consolidation to the downside with volume decreasing as you're moving down, I don't think this kind of maneuver, when you break out, calls for this kind of maneuver or even something that's like this, right? I think at least here, but likely higher, right? And this is called a bull flag. And we've talked about it before. We've talked about it so many times at length. If anybody's been watching my Stellar Lumens videos, you're bull flag pros by now. It's not hard to be, right? It's very, very easy concept. But from a low to a high here of this move, you take the flag pole, as it were, you take the flag, you put your flag pole at the base of the flag, and that's how you get your measure move. The measure move takes you to about $1.90, right? So the nearest target from there, from a high to a low, and I don't think that you go below this low, would be $1.99. And oftentimes when you hit the 2272, you don't find resistance right at it, though you absolutely can. It's just more common from what I've seen to go a little bit above it, just a little bit above it. So something just above $2 is what I would expect personally. And if we look at this too on a monthly time frame, we go all the way out to the the 2018 high, your very first cycle high, to your bear market low here in 2020. High to low, your 1272 here is at $2.46, which is in between the 2272 and 2618 here. You know, something like that really could happen. You could even go all the way to 271, man. Nothing's stopping you. Hell, you could go higher than that. But I think at that point we're getting a little bit ahead of ourselves, right? We start talking about targets like that, we're getting a little bit ahead of ourselves. I think $2 is a good area to have your eyes focused on for now. Don't lose sight of that target, and please don't get discouraged if we move lower from here. I expect that we do. Don't get too excited either on that note. If we move higher over the next 8 hours, if we do move up to about 32 cents, 33 cents, somewhere in that zone, and then pull back, that's likely the outcome, right? We're still going to have lower highs. The only time that I would get excited at all from a relative perspective would be if you get above 33.5 cents. You have to get above there and close above there. If you can do that, then we can rethink everything I've said in this video. Maybe you're not going lower. I mean, maybe not everything in the video. You still will go to those targets higher like I was talking about, but maybe you don't go lower and you're recovering right now. But I suspect, again, a little bounce from here, just a little one. Confirm resistance at prior areas of resistance, prior areas of support, I mean, at 32 cents, thereabout, and then move lower, probably down to 27 cents or thereabout. Hit the like button, you guys. Thank you all for being here. Subscribe if you want to see more content like this. Good luck, everybody. I know that these times are trying, but you know, what is it? Hard metals, hard ingots. I don't know. They're forged in fire, right? It's the most durable materials on the planet that are forged in fire. Also, some of the least durable material, ash, is forged in fire. So which one are you going to be, right? Don't let it smoke you out. Don't turn into ash. Don't crumble into dust, right? Get hard, get real, get rock hard, man. Get metal hard and stay your emotions, my friends. We are about to break out and see higher targets. It's just a matter of time. The price, most of the dropping, if you're considering, if you're at all considering selling now, let me just, can I please just speak to you, whoever you are. Not financial advice, not a financial advisor, but let me try to walk you off a cliff here, okay? You want to sell here because you didn't sell here, because you didn't sell here, right? These were the ideal times to sell, right? Even here, that was somewhat ideal, right? Big pump on that day. Not as obvious. I thought we all probably thought that we would continue pumping with that kind of reaction, but you wish you sold somewhere higher. So now because you're down here and you didn't sell at these higher ideal prices, now you think, oh, screw it, I should just sell at this non-ideal price at the literal second lowest low of this range. It doesn't make sense, right? This is not the area to sell. You might be feeling remorse that you didn't sell earlier, but you have to get over that. You got to swallow that, okay? It's okay to feel remorse. It's not okay to act on your emotions when it comes to investing, okay? Suck it up. You can't sell. You can't squeeze this lemon for all the juice it's worth. You can't maximize your profits, right, and do that anymore. You're in a position that's too risky to sell. We're in a bull market, you guys, and make no mistake, you have higher highs to go. Why would you sell anything here when it's the worst time to do it, and then inevitably you will see higher prices? Because what? Because you're going to drop 10% more, 16% more because of that greed factor? You want to try and squeeze that lemon for everything it's worth? I don't think so. Don't do it. Not financial advice, not a financial advisor, but every time I do something like that, at least with money that matters, right? Where I'm feeling that panicked emotion, it's not calculated, it's not methodical, it's all just emotionally based, it never works out. It never does. And maybe for you it will. Maybe this one time it will, but odds are probably not. Odds are, and you probably know what I'm talking about, because if you're the person that acts on your emotions, this probably isn't your first time doing it, so you already know what I'm talking about. Don't act on your emotions. Don't get scared. Don't get too excited either if we move up a little bit, because we probably still do have lower to go. But inevitably, just be patient and good things will come. Good things come to those who wait. It's just a matter of time. A week, 2 weeks from now, it's going to be a whole different world we're living in, my friends, okay? By the end of March, new all-time highs, everything. It's all coming. Just be patient. Hit the like button, subscribe. I'll see you on the next one. Take care. Thank you all for being here. Bye.